Hello everybody, welcome to a special edition of Whiteboard Wednesday. I'm Nick Bjorn and today we're talking about the 1099 DA. So getting started, we're going to discuss the good, the bad, and the ugly of this new IRS form and what it has entailed for you in 2025. Getting started, the good news is the government's starting to recognize digital assets. They even are going as far as to give us our own form to report our assets to pay taxes on. Whether you think that's a good or a bad thing, we can move on to the bad and simply, we're put under a microscope now. So the IRS knows that we have digital assets, they're being reported to from the exchanges, and now we're paying taxes on this form behind me. Let's talk about the ugly real quick. It's only going to report the proceeds and not the cost basis. So what does that mean? Let's take a step back real quick and understand what cost basis is. So cost basis is what you pay for your coin plus any associated fees. So if you're on an exchange like Coinbase, you buy a Bitcoin, you get an exchange fee, for instance, you put those two together and that is your cost basis going forward. That's what it costs you to acquire that Bitcoin. You do not pay taxes on cost basis, very important. So that cost basis on what you acquired your Bitcoin for, you will not be paying taxes on that portion. Here's the problem. If the 1099 DA is only reporting proceeds, what you sold for, and not your cost basis, what you paid for it, then you're going to get a $0 cost basis. So that's problematic. We can kind of see it here through this example. If you bought one Bitcoin at $50,000 and then you sold it for $100,000, your gain is $50,000. So this $50,000 is what you're paying taxes on specifically. But if you assume a $0 cost basis from your 1099 DA form, you don't report your cost basis, what you're going to get is this solution right here. So on $100,000, you're paying taxes on the entire $100,000 versus the 50. So at 20%, if you're assuming a federal rate of 20%, never mind your state taxes and all that, just for easy math, that's about $20,000. Whereas you should have been paying on $50,000, which is only $10,000. So if you do not report cost basis and it goes to zero, you're basically in this scenario paying double the amount of taxes. This is going to happen to just about everybody this tax season. It's going to be hard to avoid because this is not going to be included in your 1099 DA. You have to go figure out your cost basis number and put it in yourself. So let's talk solutions. The solution is digital asset reconciliation. We call it DAR for short, and that is verifying, matching, and reconciling crypto and blockchain activity across wallets, exchanges, and block explorers. Sounds like a mouthful, right? But really what we're boiling this down to is it's accurately reporting on-chain activity and also establishes cost basis from the first trade you ever made. So that's very important. Whether you started crypto last year or you started in 2012, there was a time you entered the market and established a cost basis and you started building your crypto portfolio. So that's what we're trying to get to here. What's the best way to grab all that info, put it in one place, and get that cost basis number you need? Well, there's really two solutions. Number one is a DIY tax software. We're talking Coinly, CoinTracker, CoinTracking. I mean, there's a lot of them on the market right now. We specifically like Coinly around here, just saying it's a little bit easier to use. It organizes your crypto data in one place, so all your wallets, all your exchanges get poured in and ported in, and then you can go through and sort all your trades and iron those out if you know what you're doing. And then you should be able to print out your 8949, your Schedule D information, and you can either upload that to TurboTax or you can give it to your CPA professional. There's also an era of blockchain accountants that are coming online that actually do this kind of work for you. So this is like a full do-it-yourself service where you hand it off to someone similar to handing it off to a CPA, but you're giving it to a blockchain accountant to reconcile all your trades. They'll go ahead and do all that for you. They'll come up with the accurate cost basis that you need to plug in here. So you don't leave this blank. And then they can also optimize tax savings. So this is another part that you don't hear too often. There's a lot of different strategies to optimize tax savings through crypto, and these individuals know how to do it. And then from there, you can get your 8949 as well, Schedule D, hand it off to your CPA as well, upload it to TurboTax, and now you're compliant and you're also saving money and you solved for that $0 cost basis issue that we're going to have with the 1099 DA. So I hope you learned something today. This is Whiteboard Wednesday. If you like our channel, like and subscribe. We appreciate it. We'll give you more tax info and teach you how to save more of your crypto.